Welcome back Tuesday here on Squawk Asia. The lead from Wall Street kind of mixed. The Dow gave up 9.5 points. The S&P was down about half a point. The Nasdaq, though, edged up 4.5 points. Yu-Dee Chang is principal and also chief advisor at ACE Investment Strategists. Assets under management of $200 million as of May of this year. He joins us live out of Washington, D.C. Yu-Dee, good to see you. So we had that nice beat on payrolls. We had S&P coming out and upgrading the credit outlook of the U.S. Help, but not for long. Why?
Well, basically, it's a very quiet day today. If you think about it, this uptrend in the stock market is pretty much intact, right? So I think the word, especially out of the unemployment report, is either Goldilocks or sweet spot, meaning that the economy is sort of growing, but it's sort of chugging along. So the Fed is probably not going to scale back from the QE pretty soon. So the market rebounded a little bit. But if you look, the market was up, almost 25% since November. So it's about time we sort of consolidate a little bit.
All right, let's talk a little bit more about these jobs numbers. The unemployment rate wasn't so hot, though. And you're saying that, look, at the rate we're going right now, it's going to probably take about 25 months, according to your math, to get to normal unemployment of 4.5%. How many months is it going to take, I'm curious, in your math, to get to 6.5% unemployment? That's important because that's when we know the Fed, that's the magic number for the Fed.
Absolutely. That is the magic number, about 10 months, actually. So that's why everyone is thinking, well, the soonest the Fed may do something, maybe it's in the October meeting, right? So, and some people are saying it's probably going to be the middle of next year to get to that Bernanke 6.5%. So that's why somewhere between October to the middle of next year, 2014, is the time. The market is sort of anticipating Fed to raise rates. If you look at it, the bond market itself is already anticipating it, not only on the longer end, the 10-year to 30-year. If you look at the 1 year, the euro dollar, you realize that the rates start to move up already in the anticipation of it.
Yu-Dee, let's talk about that backup that we're starting to see in bond yields. What do you think how do you think it's going to unfold in the second half? And what should bond investors do? Because they have had a miserable couple of months.
Yeah, you know what? That is the million-dollar question. If you like it, forget about what everybody else thinks for a second, right? Let me give you a personal example. Not even my client's portfolio. Let me tell you my own portfolio. I hold a lot of bonds, right? So the question I have for myself is, wow, are we going to have a bond bubble? Should I just dump all the holdings? But I look around saying, other than the stock market, there's just no yield to be had anywhere else. And right now, the bond market is just not collapsing. So why should I go out there and sell everything I have in the bonds? Where am I going to put it? So little by little, I might be easing out of the bond market, but not selling all out. Thus, lead me to believe we're not going to see a collapse in the bond market.
Okay, thank you. Thank you so much. That's Yu-Dee Chang from ACE Investment Strategists. We're going to get back to him in just a couple of minutes. And as we head into the break, we're going to leave you now with a look at the Dow heat map. So you can see the breakdown of how blue chips performed overnight. We had a mixed performance for the market last night. We're going to be back right after this. Stay with us. Good morning. Welcome back to Squawk. Let's get back to Yu-Dee Chang. Yu-Dee is principal and chief advisor at ACE Investment Strategists. He is joining us now out of Washington, D.C. Yu-Dee, a couple minutes ago, we were talking about this backup that we're getting in bond yields, and we're feeling it over here in Asia, and other emerging markets are feeling it as well in the form of an outflow from their currencies and their bond markets. We've got the Indian rupee at a record low against the greenback. What are you hearing about how investors are going to be approaching EMs from this point onward?
Yeah, absolutely. I think right now, the major action, I think the neighborhood is still not that great. I'm talking about the entire world equity market or economy for that matter, right? So I think U.S. is still the best looking house in a not so great neighborhood. So right now, U.S. seems to be the strongest. And I think that's going to continue. If you look at all the base material countries, Australia, Russia, Brazil, like you were saying, not only their currencies hasn't been doing well against the U.S. dollar. If you look at it, their stock market hasn't been doing that well either. So I think that is going to continue. At least that's the feeling here in the U.S. I think everybody is pursuing some stability, and they're looking toward the U.S. So if you ask me, I think dollar will continue to gain strength, in my estimation, against the euro currencies as well as all the emerging currencies. And then market-wise, I think U.S. market will still tend to outperform the emerging markets.
Yu-Dee, so does that mean that all that money in Japan is going to find a home in the United States, because a fair amount of it hasn't yet left the shores of Japan?
Yeah, if you ask me, I think so. More and more and more, that third era that we're talking about here, that is just it's not working as much, right? So the entire world is still in its QEs. It's just I don't think it's giving such a comfortable feeling. So if you ask me, I do believe so. Right now, Japanese yen-wise, maybe on the short-term basis, is going to maybe appreciate a little bit. I think that's the feeling of most traders against the U.S. dollar. So I think over the short-term basis, like you were saying, that money might not come out yet. But I think over the longer-term basis, I do believe that money will tend to flow to the U.S., into the U.S. stock market for that matter.
That's so interesting, Yu-Dee. Do you think that that money coming in, that new source of funds for U.S. Treasuries, would be enough to offset a tapering or a withdrawal by the Fed?
Yeah, if you ask me, that's exactly, in my estimation, I think what's going to happen. I think that is going to offset a little bit of the negative effect. I think when the Fed, when it starts to raise rates, whether it's going to be October, December, or early part of next year, I think that initial knee-jerk reaction to the bond market, no doubt, it's going to be to the downside. But I think whether it's going to be a massive exodus, or whether it's going to have, like you were saying, counterbalancing money, whether it's from China or whether from Japan, I think it's for another matter. My own personal opinion is that, yes, we will see some money coming out of from overseas, thus counterbalancing the withdrawal from the U.S. Fed.
Okay, we've got the BOJ today. How closely are you going to be watching that? And does that affect the investment decisions of your average investor in the United States, what Japan is doing?
Yeah, you know, Lisa, if you think about it, I think recently, for the past, I would say about 2 or 3 weeks, U.S. has been sort of ignoring the market, that is, ignoring Japan. Whatever news come out of Japan, U.S. is sort of lukewarm and not really reacting to it. And I think from the way it's talking over here, whether you're talking to the traders on the floor or talking to fund managers, I think we're watching it, but I don't think that is going to have a major effect to the U.S. market, whatever the BOJ does.
What's your best advice to investors, Yu-Dee?
Well, if you ask me, I think the trend is intact, right? But at this stage, that nice and smooth, straight up market is probably over. So right now, you have to get used to a little bit of volatility. You know, people talk about selling May and go away, especially in the month of May. But that's not really the May effect. If you look at it, selling May really means the month between May to October. This 6 months, on the average, since 1950s, Dow Jones is only up about 0.5%, where the rest of the 6 months, Dow Jones is up about 7.5%. So I think get ready for some consolidation back and fill in the market. You got to be a little patient right now. You have to buy dips and sell rallies rather than trying to chase the rally. So patience right now is a virtue.
Okay, noted. Thanks a lot. Yu-Dee Chang, Ace Investment Strategist, live out of D.C. Still ahead this morning, Lulu.